future trends, deep insights, industry leaders. This is the iGaming Next podcast with your host, Pierre Lindh.
All right. Good afternoon. Good afternoon. Daniel, how's it going?
Hey there. Awesome. Really good to be here. Love the intro. I'm pumped. Really happy to be talking with you today.
I'm happy to hear that. Gives me energy as well. Daniel, we've been speaking a lot lately, which is something that has been awesome, actually. It's been really nice to get to know you over the last couple of weeks here. Another connection made through the wonders of Clubhouse.
Yeah, we have breakfast together every Thursday morning.
Yeah. Isn't that fantastic? That's the way you turn, become from professionals into friendships these days, I think.
It's definitely the future of the getting together, I suppose, aspect of our business, right? You don't need to go necessarily to a conference just to talk and get on a panel and discuss topics. You can just set one up in 5 minutes. Clubhouse I'm still getting my head around it, but it's really cool. It's great to meet people.
Yeah, it is. It is for sure. And the last couple of weeks here on the Thursdays, it's really been great to just kind of gather the industry, some of the top minds, like yourself and Tim and Robin and all the others used to kind of discuss this like big topics and whatnot. And it's through these sessions, obviously, that I just realized, like, Daniel, you're obviously a super interesting person, and I was really happy that you came on to the podcast today. So we have a lot of stuff to discuss, actually. But to give a little bit context to start off with, I mean, Daniel, you're the CEO and founder of Carousel Group, up and coming operator. Talk a little bit of this product and where the company is heading.
Okay, so Carousel Group was, I suppose, a baby of mine that was born late 2017, and maybe it's been a long time coming. I first entered the industry unknowingly, really, almost 20 years ago. I'm not going to count days, but it feels like a long time ago, where I ended up in an affiliate business. I was just learning to write software and ended up actually helping an affiliate company. I wish I knew then what I know now. I would have been retired 5 times over as an affiliate. But I ended up also working with an incredible young company back in the day called Sportsbet in Australia, pre-Paddy Power days. And that was really exciting. And I ended up moving out of the industry. I was director at a media company in technology, and a lot of time in and out of the startup world. And I ended up working in Spain, I want to say about 7 or 8 years ago now. And I was working with an incredible woman called Jessica, who had founded this business called Mediatech Solutions, and really innovative, launched the very first regulated casino in Spain, built the very first regulated platform, really exciting, intense environment, trying to take on the world. And, we were running operators across Spain. We were trying to do deals around the world. We set up joint ventures in America. We were doing, did a couple of licenses in Malta, stuff in South America, trying to work with the Chinese welfare department, building emerging technology back at the time, omni-channel, really exciting. And that business, we sold that business, I want to say again 3 or 4 years ago, just before starting Carousel Group. And I figured I'd spent many years on the other side as a B2B business, building platform, building technology, helping other operators grow their business. And as a tech and product guy myself, I saw so many opportunities in the industry. A lot of the operators, they come from archaic institutions, they're family-run businesses, they're slow-moving, they don't know how to adopt emerging technology, and there's so much opportunity here in this industry to be smart, product-oriented, customer-oriented. And I thought, I'm going to have a go at this. So Carousel Group was founded. Originally, I was intending to get into the global market, really look at the markets that were still yet to be regulated and try and capitalize on that space. Unfortunately, it was a perfect storm, and we were growing just as country after country started regulating. I thought, I don't want to get into the dark side of this show. I want to focus on regulated space. I want to focus on long-term sustainable growth, organic growth. I want to be here in 10 years. I'm not looking to do a quick exit. And we started a process in Malta, which fortunately we finished last year. We got our MGA license. But during that process, the US had evolved dramatically. PASPA had been repealed, and the US just started booming. And I made the decision to pivot the company over to the US space. I'm sure we can talk about this for hours today. And as of really early last year, we did a complete pivot to focus on the US, almost entirely on the US. And that's where most of our business is today. We're licensed, up and running with sportsbetting.com in Colorado. We just closed a really incredible deal with Caesars Entertainment for Indiana, New Jersey, Iowa. We've got so much more exciting stuff happening. Maybe we can get into it. Have to make all of your listeners sign an NDA and I can tell them all the good stuff. But we've got some really, really cool things happening this year. Really pumped. Our team is growing. But yeah, we're a B2C operator with currently focused on the US, but with massive global ambitions.
Very cool, Daniel. And let's go into US as a market specifically. You know, I had Manu Stan, who is the head of US in Kindred on the podcast a couple of months ago, and we spoke as well about Kindred's path into the US and their ambitions there. And he spoke about, you know, selecting the states very carefully, and he recognized that he don't have the same firepower as the DraftKings and the FanDuels of this world. What's your thoughts on the US in general and your strategy there? Will you try to go in every state that you possibly can, or do you take a more cautious approach?
Well, I think most operators want to be in every state they possibly can, with the exception of a few that have decided to strictly deal with, you know, single state operations. It is a question of capital. It's an incredibly expensive market to work in and to try and grow in. You know, it's cash hungry. It's also challenging because of the domination by the top 3 or top 4 in the space that are publicly listed. They have huge access to capital. They're buying up market access, seemingly with little care for profitability at the moment, because it's all about setting themselves up for the long-term play. And I completely respect their strategy. I think that some of their ability to raise capital, their ability to deploy capital, the amount of deals that get done by some of these bigger competitors of ours are just incredible. Like the amount they're doing. Look, for us, it's every state is interesting to a certain degree. Which state at the right time is obviously a really important part of our strategy. For instance, just looking at the 3 we've just closed, Iowa, Indiana, and New Jersey, they're very different. You know, Iowa's quite a small state. Just opened up remote registration at the start of this year. You know, New Jersey is one of the more mature states. It's the gold standard of US states. But they all have their different, pros and cons. And for us, for instance, choosing those 2 states, or all the other states we choose, they all have their own strategy, and it's not a one size fits all by any means. You know, for instance, you can go into a market like New Jersey where operators have been there and everyone knows the operators, and there's brand fatigue. There's unhappy customers, there's bad PR, there's all the things you'd expect in a market that's been around for a while. Whereas you go into Iowa, a lot of the other new states and soon to be launching states, and it's different. Everyone's got, Michigan, first chance to impress everyone. Michigan was incredible for the guys that were in there. So congratulations to some of those operators. And you look at like Barstool's revenue out of the gates, it's just incredible stuff. But every state is like its own country really at the moment, which is opens up a whole nother set of questions and concerns. Why they're all regulating differently? Is there ever going to be standardization? What happens in the future if the Wire Act drops and you can operate every state from one state, and all kinds of stuff? It's a very.
Do you think there will be a federal legislation eventually?
No, it would be interesting to see what happens. But no, being able to operate in all states from one state, I don't see that happen. There's too much money now for the states, for the state tax, and for the casinos for them to ever allow that to happen. There's too much taxation available, and there's too much lobbying power for them to really, release their stranglehold on the state-based approach.
Yeah, fair enough. So we spoke about the DraftKings and the FanDuels, the major key players in the States at the moment. Obviously, investing massive amount of money, have been building brand equity for a long time through the fantasy sports brands that where they started at, have massive databases and so on and so forth. How do you come in to compete with these massive brands in a market that is so cash hungry, where you probably have to invest years before you see profitability?
There's many ways to be competitive, just like in any market. You could probably look at most markets around the world and say they're saturated. There's no room for competition, but there is. There's still new entrants into the UK market. There's still new entrants into the Australian market. There's still new entrants into the Spanish market. And people might consider them to be saturated. Fortunately, in a lot of the US states, there's a very limited supply of licenses. So while they're saturated because they've got lots of cash, actually in terms of numbers of operators, there's not that many. And that is an opportunity in itself, because at the end of the day, they're just companies with people and a product. They usually, they have one technology stack, or many that have many, but one set of products and one brand, and that brand might work, it might not work. Their marketing strategy might work, it might not work. They might have a big PR issue and they might fall out. They might have regulatory issues and they disappear overnight. And then you only let's say it's a 17 skin market, then you're left with 16 or 15. And once the consolidation phase comes, and it will come, then there'll be even less competition in the future and more opportunity for people to really differentiate themselves. There's so many ways to differentiate yourself in a market like that. One of the brand archetypes, or the brand archetype that we were implementing with sportsbetting.com is the everyman brand. We want to be there as a reliable operator, a reliable brand that you can trust, that takes care of its players, that takes care of responsible gaming. It does what it says it's going to do, great customer support. And I think there's a place for brands like that in the market we might not be at the top of the tier 1, but we can very easily get to the top of the tier 2 stack. And we will be there, as we go on and on and on. And I think it's a really comfortable place for us to be in. That, the MGMs and DraftKings and FanDuel, that, they're going to take up the top 80% in most states. They're in 70%, but there's still a very healthy amount of revenue in that bottom 20%, and that's a really exciting place to be in.
Yeah, can they? So I think so as well, right? They will take the 80% market share, but will they be able to hold on to that 80% market share long term, or is this a short term market?
They're already struggling with it, right? There's a lot of interesting data coming out, analysis on on the early mover advantage and how that's being chipped away. You look at the market share between DraftKings and FanDuel, and PointsBet and MGM and Barstool, and they're all starting to chip away. That they're really starting to even out a little bit more. It's very hard to compete with companies like DraftKings because they're so well capitalized, right? They can just even just their ability. They raised $1 billion last week, I think, with zero interest. I mean, it's just incredible ability to raise capital. It's very hard to fight with that, So
Yeah.
But there will be consolidation. It's not sustainable. At some point, the valuation models will change. Capital might be a lot harder to come by. People are going to need to start being held responsible for their spending, and responsible for the capital they've been raising. It's going to be an interesting next couple of years.
Yeah, I mean, it really feels, not just in the iGaming industry, but it really feels globally like we are going through, it's a gold rush at the moment. I mean, there is so much money in the system, not only in the gaming industry, but just looking at tech in general. Tesla up, what is it, like 500% the last year or something like that.
Yeah. And again last night.
Yeah, up again last night, and obviously in the iGaming industry, look at the DraftKings valued at like $25 billion, and they are still spending more in marketing than they have in entire revenue. Right? They are not even close to profitability. Do you think is it realistic what's happening now? Can this go on? Will there be a correction in the market?
You'd think so. It seems like investment recently has become more speculative than ever before. Tesla's the perfect case. They must, I don't know what percentage of cars they sell in comparison to Volkswagen, but or Ford or whatever. But their share price sure as hell doesn't care about their production capacity. But it's speculative, right? It's what will they do in 20 years' time? What will they do in 50 years' time? If you buy $1 of Tesla stock now, if they're on Mars, if they're sending people to Mars in 2050, I'm sure their stock could be worth $1 billion. Warren Buffett must be getting scared of some of these small tech stocks or buying into them. In the gaming industry is no different. It's so speculative. And that's, again, a really exciting space to be in, for us included, because it's all about potential. It's about being able to build a great strategy, market a great strategy. People believing in the business. It's a lot less about fundamentals, at the moment anyway, at least in our space. unfortunately, look at some of the European counterparts don't get to benefit from the same kind of valuation models or the same kind of future outlook, which is why so many of them are so keen to get to the US, and they are. Everyone's trying to get to the US, especially all the big guys, right? They're all either doing JVs or partnerships, or they're trying to get into a SPAC or something or other. But it's tough. I mean, we went into the US, as I said last year. We signed our first market access agreement last April, I think it was, for Colorado. And I felt very late to the party, like the guy that turns up at 1 a.m. and everyone's already disappeared. But, now a year on, and we're kind of still early doors. It's like people who got into Bitcoin in 2018. They were very, very late to the party, but they still had a lot of upside ahead of them.
Yeah, exactly. I mean, there's been a lot of ups and downs in the crypto space as well with Bitcoin. I remember when it shot up to $800. It's like 2014 or whatever, and everyone was like, "Oh my God, this is the biggest thing ever." Then it went down to like 200, and that's when you hear the first time that the Bitcoin is dead and whatever, and then you see these corrections happening all the time, which is interesting. But going further into on the US market. Also, if I understand things correctly now, there are obviously certain states that are opening up, and all of them that do offer some form of online gambling offer sports betting, and some of the states offer casino as well. Do you think that as we go forward, will more and more states also allow casino, or will there be a discrepancy between the states who are offering casino and sportsbook, or only casino? Or only sportsbook?
Yeah, it's interesting to see how it's unfolded, because it's not really a problem that the rest of the world understands so much. And while there are, casino or iGaming, as we now tend to call it in the US, and sports betting separation in licenses, it's not really a thing to divide the two. They try to kind of treat it as the same thing, right? The play is typically the same at the end of the day, while, there's different aspects and minutiae to sports betting customer over a poker customer over a casino customer. It's still treated as gambling, and there's still the same level of KYC and affordability checks and responsible gaming, etc. But it's interesting in the US. I think a lot of it's driven because PASPA was about professional sports, and a lot of the problems with this industry in the US was about how sports are handled and how gambling is handled with sports. I think in a lot of states there's also a lot of politics and potentially religion that gets thrown into it as well, and people's understanding of, or I suppose cultural acceptance of sports versus casino, and sports being okay because everyone loves sports. I mean, America's just sports mad, which is one of the reasons why I love being able to have a business there, because I'm also sports mad, and a lot of our team, where we can't shut up about it.
Which sports are you into, Daniel?
Well, I've got to call it soccer now.
Soccer? Oh no! You've gone that far into your American journey.
I am. I even spell words with Z's in them.
Oh no!
Yeah, I'm a convert.
Yeah.
I'm really getting into American football, particularly like I love the broadcast shows, the way like Red Zone, the way it just gets showed. It's just some of the most exciting sporting action in the world. I mean, we're in the middle of March Madness at the moment, which is just crazy, right? It's like the most incredible athletes, but they're all college students. 68 teams in a brackets playoff. It's just like so amazing to watch. It's so exciting. But to come back to the point, I think they will all come around to it. Maybe there'll be a couple of exceptions due to maybe exceptional circumstances like religion or politics or something that will prevent casino from really coming to light. But particularly last year, and this year ongoing, the pandemic really made state regulators and budget departments think about where they can get revenues from. It really drove the industry, and it drove regulation. It drove the push. In particular, I think casino is such a great opportunity for the states to really get tax revenues into their coffers. Sports is fantastic, but casino is really where the opportunity is when it comes to revenues. It's exciting, and And we're seeing it slowly. Unfortunately, so far behind the sports angle. Most of the state, Colorado, for instance, is only sports at the moment. But I'm really confident that it will be an iGaming state in the future. We've actually already pre-secured our iGaming agreement in Colorado because we know it's going to happen. And we're currently in the process of closing a number of iGaming agreements as well in other states, because for us, it's such a big part of our business for the future. Especially when you look at player values, particularly when it comes to iGaming. I mean, they're just immense. And maybe I'm jumping around from topic to topic, but you look at like the lifetime values that some of the operators are putting on players, and like Golden Nugget, $7,000, I think it was, and Brush Street, like $5,000 lifetime value. Because mostly casino customers. That's insane, right? That's crazy.
Yeah. And how does that compare to a European player? Obviously, different countries in Europe are different, but let's take a Swedish player, a lifetime value. It's like 1,000.
Yeah, maybe for sports even lower. I think if you get them into multiple products, it all comes down to the operator themselves, though, and their retention model and their profit, but how much they're spending to acquire the customers. But if you're looking at a customer that costs 5,000, that gets you 5,000 in lifetime value, which I struggle to believe, but the numbers are the numbers. Imagine how much you would spend on getting that player, right? And then it makes you realize why these companies are raising so much cash to go and acquire customers. Yeah. Like the lifetime value opportunity in the US is like no other market.
Yeah.
Just because the stickiness of the players, their love for gaming, it's crazy, and like it makes sense. So why wouldn't you go and sponsor the sports league, or go put the naming rights on the stadium, or go to a big media deal? Because you get those players in. I mean, you'll make your money back long term. So talking about whether we're in a bubble or not, who knows? Who knows? Maybe it's actually all going to pay off, and really, like, these guys are the smartest guys in the world for raising, loading up their debt, and it will pay off in 5-10 years.
Yeah, exactly. And you would think that there's some advanced calculations happening behind closed doors, obviously. But
I think so.
You would hope so. But staying on that topic, I asked the question on like the discrepancy in the states between online casino and the sports betting, because take an organization like Evolution, and I want to tie this in a little bit with the speculation that is happening in the market that is pushing up share prices, right? So Evolution share price have also 6x or something like that in a year, and much of that is because of the expectations on the US market. Now, Evolution obviously only offers casino product. So the question is there a risk that for an organization like Evolution, that they won't be able to actually offer their products to that many states in the end of the day, if the states only allow sports betting?
If I was Evolution, I'd be pretty comfortable right now. And if I was going to invest in them, I'd be pretty comfortable right now. It'll come around, and live casino is such a huge part of the market right now. You think about the casino, the brick and mortar casino history in the US. It's a country where people love going to casinos. Like spring break is about going to Vegas and sitting at a table and gambling. I mean, it's part of their culture. The amount of like casinos everywhere, from New York, New Jersey, all across Pennsylvania. Like the amount of movement of people going on holiday and crossing state lines and going into casinos, and you project that online, people are going to want to play live casino. It's a great business model. I think it's a great business to be in right now. And I think, we're talking to Carolina this morning in Clubhouse about, some products that are going to keep enhancing the live casino experience. And it is a really, really exciting space. And I think it's where we'll see a lot of innovation, a lot of interest as the states start to open up. I think anyone who's in there now and can afford to stick around is going to benefit from it long term. But yeah, there's always the question of how long can you wait? How long can you afford to wait until there's enough critical mass that it becomes a profitable business? It is a couple of steps behind, as we know, but I'm confident that it will come.
Yeah, it's interesting, because Evolution is one of the companies where their PE number, the profit to earnings ratio, is basically 80 times the share price right now, which means that if you would buy a share in Evolution Gaming, it takes 80 years for them to earn that, for them to give earnings return on the price that you buy, basically. So that just tells again the story that either there is just an insane amount of money that is flowing into the stock market right now that is losing grip of reality, or that the market is correct in its estimation that the US will explode the way it will. So just to give some context to that, like the average PE ratio for a major listed company in the US at the moment is something like 22, I think, which is also the highest it's ever been, except for the dot-com crisis and the financial crisis in history. Is the highest ever. So 22, and Evolution is at 80.
Yeah.
You know?
Well, you add on the speculation and the hope of post-COVID recovery on top of an industry that's just starting out, and it's like a multiplier on top of a multiplier of, wow, how big is the future going to be? And the valuation model of the operators, our competitors in the space, it's just crazy. They're multiples of future earnings. The lowest one I've seen in a investor presentation is about 7 times future earnings, so future revenue, future GGR. DraftKings, I want to say be 20, 25 times or something even crazier. I mean, that's mad. You know, again, going back to like our poor European counterparts, if they want to sell their business, they're, you know, maybe 15 times EBIT, you know, on the high end. You know, I think maybe NetEnt was a good example of a company that got a really good EBIT multiple. But over in the US, it's a whole nother stratosphere. It's like those calculations don't even matter. It's not. This is part of the consolidation in the future. And maybe the end of the bubble isn't so much about the bubble bursting. It's the changing mindset of how we value businesses. It's going from this future outlook to a present outlook of actually, okay, cool. All right, the party's over. Who's retaining players? Who's getting good lifetime value? You know.
Go ahead.
No, I'm looking forward to that moment, but also I don't want it to come too soon. You know,
exactly.
I want to get my foot in the door properly first. I want to have a good market access across the country, and then we'll prove how great an operator we are. But at the same time, right now, we're really interested in just being part of this incredible growth story.
Yeah, exactly. The party needs to continue a while longer. But you know, it's so interesting how much have changed in the multiples in such a short space of time. I mean, go back to a couple of years ago when GIG offloaded their B2C risk. They sold the B2C part to Betsson for a multiple of 4, I think, and it was EBITDA x4. Right, and that was in the midst of the Swedish regulation, really like weighing the operators down, especially the Scandinavian-focused ones, and now put that in contrast, and like you're saying, NetEnt, I think even upwards of 20 times the EBITDA, I think even, and now you see the multipliers definitely above 10 every time there is an acquisition. Now again, just again, goes to show.
The market numbers back it up, though, right? In the US, iGaming's projected at $40 billion at maturity right now, and sports betting is like $22 billion. That's a huge market, and the states are proving that. And all the analysts, every time they're readjusting their estimates, and they're getting bigger and bigger and bigger. But they're not getting bigger based on speculation. They're getting bigger based on the actuals of states as they open up. You know, Colorado is exceeding expectations. New Jersey is continuing to surprise everyone. Like Michigan, Pennsylvania, they're all just incredible growth stories. So the analysts have got so much data, real data, and it's showing that this is an incredible market, and maybe these valuations are justified.
Yeah. So what about, you know, you mentioned consolidation of the industry. Do you think that and we've seen a lot of consolidation now the last couple of years. I mean, the Flutters and the Entains and so forth. Do you think that the industry will consolidate to only a few giants? And will Carousel Group, which side of the aisle will you be on? Spoiler alert.
That's a good question. Let's start with the consolidation, and I'll think about our strategy in 2 minutes.
Okay.
Absolutely, there'll be consolidation. There has to be consolidation because some of these guys, again, they're too leveraged for them all to be successful. It's probably just impossible at some point, especially when you look at the cost of market access in some of the big states. And the big states are still yet to come. New York, California, Florida, Texas, they're still yet to regulate. imagine how much money is going to be thrown behind those states, and how much capital operators are going to have to raise to get into those states and be competitive in those states. And then you keep going down the list, and this Ohio's coming soon. It's a huge state as well. There's lots of big events coming, and people are going to be raising more and more capital, and at some point, something's got to give. It's also not necessarily a bad thing that the market consolidates. It'll be a great exit story for a lot of companies. Companies that maybe smaller companies that have been focused on a single state that realize, actually, you know what, I've built up enough enterprise value here. I'm going to sell my one state with my database of customers and my platform and my license to the FanDuels, DraftKings, whatever of the world that just want to now get one more license, one more skin. Maybe they want to have 2 skins in a state, 2 brands, just because they don't have 2 already. I mean, look at other markets; it's the white label concept's prevalent, right? Not in the US though. You typically don't have 2 brands with slightly different demographics competing with each other, but you do in other markets. So that still has to come as well. Maybe you have a VIP brand in the same state that you have a recreational, Square brand, or maybe you have different casino brands. Maybe you have one that's just focused on gamification. Again, these are things that were typical in international markets, but the US hasn't seen them because of the cost of market entry and the fact that you have to buy one skin. There's no concept of white labeling. So it's going to come for a number of reasons, whether it's people, you can imagine companies that have a big enough market cap, they're just going to start buying databases. And eventually they're going to run out of media companies to get databases from. They have to start buying up competitors. And they're going to overvalue those companies. And they're going to give them great offers. And the shareholders are going to want to take the money and go invest in the next big wave. So absolutely, it's definitely coming. And it could be a great thing for all the business out there. I think it's really incentivizing for the startups and the smaller companies wanting to get into the market, because maybe there is a short-term exit there or a mid-term exit, because the big guys just have to keep growing. They have to keep sustaining their growth by acquiring, raising capital. It's just, they've got to keep going.
Yeah.
In terms of which side of the fence I see myself on.
Choose your words carefully.
I do want to be here long term. I really like this industry. I want to grow a sustainable business. I really like organic growth. We've got an incredible team of people who really deeply understand the industry. We've got a great business. We're fully vertically integrated. We own our own technology, which is not an easy feat, but that just shows that we're not looking to go and leverage another platform, grow quickly and exit. We're building and innovating, and we've got our own products. We've got native apps out already. We're building new apps. We're building new products. And that just clearly shows that we want to be in this long term. At the same time, we're currently in the middle of capital raising. I'm opening up the door for investors. At some time, I will listen to my board. I'll listen to my investors and see what the best thing to do is for our business. But at the moment, I'm really interested in being here long term. I think we can do. I'm confident we can do really well in this business, because we're one of the few companies that's really focused on just being a good sports betting operator right now and being a good casino operator. We don't do fantasy. We're not trying to run omni-channel through retail. We're just trying to build the best experience possible for customers. And for me, that brings a lot of weight. There's a lot of value in that, in our focus and our dedication to just being a great sports betting casino operator. So it's a nice space to be in.
And you have gone to market in a couple of states so far, right? And what's the indication so far? Are you happy with the numbers that you guys have produced? Are they in line with your expectations?
The growth was really exciting at the start. At the moment, I'm more focused in preparing for our future growth. We're launching 3 more states this year. Next year, I could easily see us launching another 4 or 5. As I said at the start, I'm a product and tech guy, and right now I'm really focused more so on building out scalable technology. We're doing really cool things when it comes to really pushing the use of cloud in our infrastructure in the US. In particular, all our technology is built on this concept of microservice-oriented architecture, which basically means we have a ton of little applications that form a bigger application, and each one of them can scale up and down vertically, horizontally. And it's a cool technology business that we're in. And For me, that's the fundamental part of being successful in this market, is getting the product right, getting the product and the technology right, and everything else will come. You know, a lot of people are buying handle or turnover. You know, they're buying market access, which obviously we're doing. But I'm a firm believer that, you know, if you build it, they will come. And I want to focus more on creating a great experience for our customers. You know, focus on creating great customer support rather than just buying customers. So I'm taking a bit more of a longer term view on it. We're investing heavily in SEO at the moment as well. And you know, as we go and do more capital raises, and as we are right now, we'll start looking at some of the bigger deals. We're in contact in discussions right now with some big media brands, market access deals that come with database, etc. And you know, we'll probably start to buy a lot of handle as well in the future. But I want to focus on product for now.
Okay, yeah, fair enough. And you know, moving over to player safety, also a discussion that is relevant for different reasons. But one of them perhaps is you know, looking into the future and the potential of other states opening. You know, you mentioned California, Florida, for example. How important is it to stay ahead of regulation right now, to really give focus to player protection as a way to make it easier for other states to open up for gambling itself? Is that relevant? Is that how you see things, or how do you view player protection in general?
It's an interesting topic, you know, deep topic as well. Talk about everything from, you know, from sustainability through to player care, and also leaving a good impression on the market, which is really important. Because if you think about it, it's actually quite, it's politics really. At the end of the day, is every state's looking at this and deciding what to do. You know, today or last night was budget day in New York, and it's a huge topic there. You know, trying to decide between going with Cuomo's plan of being a state-run operation, or Senator Darbo's plan of you know, giving skins to all the casinos. And responsible gaming is a huge factor in that, along with tax. And it's a big part of their conversations. And we had the benefit of speaking to a lot of the members of government there. We've been in deep conversation with them over the last few months. And it's something that they're really interested in getting right, which I really appreciate. I think that they're doing the right moves. But it's also, you got to understand, it's quite hard from the perspective of a regulator trying to work out what is the best framework. They haven't had responsible gaming as an issue for very long, apart from the land-based casinos. It's a whole different concept. So they look around the world and they see, okay, well, UK is going through a crisis right now, credit cards and advertising issues. Spain went through a big crisis over the last year as well with advertising. You know, Sweden's going through similar issues with, you know, trying to find the right balance between bonusing and responsible gaming. And Australia's the same. Australia still hasn't managed to regulate a lot of things the rest of the world has when it comes to like online casino, in-play sports and poker. So who should they look to as being a good example of who's done it right? I don't know. I don't think really there's any particular standout regulatory regime around the world that you say that is the perfect example of how to implement. So it's an ongoing concern for the regulators now in the US to try and find the right model. Fortunately, we went into Colorado as our first state. They're really like a really dynamic regulator, really open to hearing and listening to the operators. It's been a very refreshing change, I have to say. A lot of direct contact with digital contact, you know, through Zoom calls, but directly with key people within the Department of Revenue in Colorado, and great discussions. And I think they're adopting the right approach, which is put in enough protection so that the players have a basic level of protection, put in enough oversight and visibility so that the operators can't do anything without the operator knowing. And then they iteratively start introducing rules and restrictions as they see fit based on the culture there. But it's a tough topic, and it's very hard to stay ahead of. Fortunately, you know, from our perspective, a lot of the, that's what you call them, the European operators that have come over, you know, we come from a background of strict responsible gaming. So when we introduced our technology, we already had opt-outs. We already had daily and weekly and monthly limits. We already had affordability processes. You know, we had limits on particular payment methods. You know, we know how to identify someone potentially that's at high risk. You know, there's a lot of great AI tools as well available to predict if someone is falling outside of the typical betting behavior, and you can identify them. You know, the same tools that can identify a VIP player can identify problem gaming. And I think in the right hands and the right operator, they can be really powerful tools. And I definitely see us as being one of those operators that does try and do the right thing. We want to both harness the marketing potential of some of our tools and abilities and use that to also make sure that we're providing a sustainable platform.
Yeah, and it is an interesting topic indeed, and especially when we introduce AI to the conversation as well, right? So we've seen Entain launching their machine learning powered proprietary software called ARC to basically detect harm from gambling before it happens. And similarly, Kindred have done the same thing. They have taken it a step further, saying that they are committed that they are going to eliminate harmful gambling by 2023. And they will disclose basically in each quarterly report where the trend is heading. They will disclose how much of their revenue is coming from harmful gambling. Big targets, very cocky and forward-thinking move by Kindred. And you can argue, is this going to be possible, and what will it mean? But the question to you, Daniel, is there a business case to be made out of solving player protection, or is it purely a decision for ethical reasons?
Yeah, interesting topic. I think we've spoken about this before in our Clubhouse chats. I think I don't know whether you want to call it naive to think you can eliminate problem gaming from an operator. But if you think about it, they're going to go somewhere. So if you push them away and you say we don't want them, or we're just going to block you without actually trying to deal with the topic, you're just pushing them into the black market, right? You're just pushing the players into a place where they probably shouldn't even be. So I understand why one operator wants to take care of that, and particularly when you look at the investment going into the sustainable sector of the market, especially in Europe at the moment. It's an incredible sector and place for investment right now. There's movements happening right now, I believe, where funds there's big funds being set up that will only now invest in sustainability. There's sustainability index funds. If I can remember correctly, I think the sustainable fund market is somewhere around the 2.5 trillion euro mark, or at least estimated to get there. I think some of the big funds are estimating, I think something like $35 trillion of funds will be involved with sustainable businesses. So I get why from an investment perspective, a big operator would want to start saying, we care about sustainability. I get that, but are they actually solving a problem, or are they just pushing it somewhere else? Are they just pushing those players into those sites where they're not going to get any help? And maybe this is why it's actually the industry's problem to solve, not just a single operator. We probably shouldn't allow, while we can't control them, allow one operator just to say no, because they're without actually solving it as an underlying issue. I think there's an acceptable level of responsible gaming in a business, but just it's how you handle that. Are they saying it's zero because they're not going to get any to start with, or because they're going to get some and then they're going to deal with it? Do you know?
Yeah, exactly. And you would also think that you would also involve the argument of your own personal responsibility as well. I mean, these systems would also be quite intrusive in your own behavior, because I would think that there will be a lot of overlap between these systems. Giving these very early warnings would also mean that they would also produce a lot of false positives as well. So players who don't have any problematic gambling behavior being warned to stop playing, basically, or getting a call and say, like, you should probably slow down a bit, where in reality it's like, yeah, you don't really have an issue. That would be a question to me as well. It's like, yes, Kindred may be able to eliminate harm from gambling, but the question is, how will that impact? How will the overlap be in the sense of the false positives?
Yeah, we've noticed a real challenge when we try and deal with or implement harm minimization actively with a customer in the US, because they're not used to it, right? Because they're all coming from black markets, and I think the European players are a little bit more educated into the sense that, okay, operators might ask you for affordability check. They might ask you where you got your money from. They might ask you if you have any, but they might run you through a 10-question survey to make sure that you should be playing. In the US, because there's no education there, it's Why are you asking me this? Why do you want to know my details? This is terrible. I'm going back to the black market. So again, there's this collective responsibility, I think, now in the industry to try and educate the players and not just push them away. Try and create a place for them to be, and then implement the right tools and processes. And it's a tough one. No operator wants problem gamers. They're not good customers to have. Then at the end of the day, it's not great for commercial reality either, right? Because more chargebacks, more customer complaints, more likely to call up the regulator and say why they should have been paid out or why they should have had their bet accepted or whatever. But at the same time, this is our business. We have a responsibility. It's similar to, if someone walks into a bottle shop with a problem, do you just kick them out of the street, or do you have a conversation with them and take them outside? How do you deal with these things? There's no one size fits all.
It's such a difficult balancing act to make, right? And then at the same time, again, looking at the big trend, the big global trend of sustainability, not just within the iGaming industry, but generally, where lots of capital, lot of investment is flowing into sustainable businesses like Tesla, Apple, and so forth, who have very strong ESG commitments. Do you think, like, on the topic of ESG, environmental and social governance, do you think that this is something that can be detrimental to the industry, which is traditionally seen as not a sustainable industry? What will this mean for the iGaming industry going forward, where more and more capital and more investments are being done from an ethical point of view? What can the industry do to not fall behind?
I think the biggest place to start is the bridging the wealth gap, in particular making sure that all people are taken care of. We saw this recently with like Elon Musk. He's all the kickback he got. It was Bernie Sanders was saying, "Why are you trying to send man to the Mars right now when we've got 50 million people here, the 500 million people here that need food or a basic income?" That's obviously an exaggerated problem, but this is kind of what we're dealing with right now. And you look at in the US, 2/3 of adults are struggling to make ends meet, put food on the table right now. It's a huge problem. And then you add on top of that, you add vice industries, you add entertainment industries, and obviously gaming, and it's potentially adding wood to a fire if it's not handled properly. I think we have a responsibility to firstly to take care of the people that we're connected to, our customers. For me, CSR or sustainability or whatever, for me, I like the concept of shared value capitalism. I really struggle with myself, the philosophy of myself, because I see myself, I'm a bit of a socialist, I'm a bit of a lefty. I think all people should be taken care of. I think all people deserve, basic income and healthcare and whatever. But at the same time, I'm a massive capitalist, right? I want to drive a nice car. I want to have nice views. I want to live a good life. And those two don't necessarily work that well together. But I think for me, shared value capitalism, which I try and learn more and more about as the years go on, is about taking care of the people around you. Making sure that your employees have an appropriate income to lifestyle, I suppose. There's a couple of great podcasts that I listened to recently, and one was from Dan Schulman, the CEO of PayPal, and he talks about a net disposable income. And it's a big, expensive project that PayPal introduced to their business to make sure they understood the disposable income of their staff. And it's not just because they live in, say, Montreal versus living in Bangladesh versus living in New Zealand, that they get treated with, okay, you're a junior developer, you get X. It's actually, okay, how many children do you have? How much rent do you have to pay? Do you have, dependents? Do you live with your parents? And actually treating people as individuals. And that's not an easy thing to do, and sure as hell is going to be very expensive. But for me, that's the future of sustainability as well. It's a big part of it. It's taking care of your own employees. I mean, we're all human capital businesses now. We all have lots of people. Some of our competitors now already, in the thousands of staff in the US, and some of the guys in the UK, and towns like Stoke have got many thousands of people working in single operator businesses. That's a lot of people to worry about. but it's also a lot of people's lives that you could benefit, or positively or detrimentally, if you care about these things. So look, for me, shared value capitalism is about taking care of everyone around you, and it extends past your own staff as well. It's into your communities, and we only just started talking about this at Carousel Group recently. I'm really keen on exploring the idea of allocating a fixed amount of budget where we work with local businesses, where we tackle some of the problems that America's facing. For instance, we work with Black and minority and female-owned businesses, and we say, instead of just sending all of our money to a big agency, we're going to work with local businesses that need it. We want to distribute the wealth. This is a very wealthy industry. There's a lot of money in gaming, and for me, it would be a huge shame if it just sits within the investors and the execs. And that's, for me, where we can really make a difference in this industry. It's about making sure that everyone benefits from gaming, especially in the US now. Trying to bring all this revenue onshore, and the community should benefit from it. And the governments and the regulators need to do more about it as well. They should probably be looking at also implementing things like, for Black and minority and female-owned businesses, saying how can they be a part of this? So it's not just tax revenue going straight to the government. It's not just going straight to a Delaware corp or an offshore company. How can everyone benefit from this opportunity right now, which is bringing all of this revenue that was previously disappearing offshore? How do we now bring it back onshore and make sure everyone gets to benefit from it?
I love that concept, shared value capitalism, and this for the simple reason that it's rooted in reality, right? So traditionally, you talk about capitalism is not good for society. It's about to be a capitalist. Like this is the traditional left-wing views I'm saying now, to kind of beat down capitalism in general. But we have to wake up to the reality that this is the system that we are living in, and it's not necessarily a bad system. It's more necessarily that traditionally capitalism has been seen as something very selfish, as a very selfish system. But the trends in society in general is heading towards more transparency and accountability for organizations, right? So through, if we want to see the good side in social media and bringing people together, is the fact that we can, like the individual can hold accountable the large organization to a much bigger extent these days. If someone fucks up, the news spreads very quick, whether the company wants it or not, or whether they try to control a few media organizations or whatever. They don't have control over the masses any longer. And likewise, on the retail investor side of things as well, the retail investors now have so much power that they are beating down the big man, right? I mean, look at GameStop. The whole situation there is just a big fuck you to the institutional investors. I mean, that's literally what it is, and showing Wall Street who really has the power here, and basically telling Wall Street that, like, watch your backs, because if you are acting unethically, which was the case with GameStop, where these big institutional investors are shorting the stock, right? They want the GameStop to fail, and before that, there was the in 2018 where the institutional investors were trying to make Tesla fail, and I think the concept of shorting itself is like, okay, I can understand why, and personally, I'd like to see a drive to short like Shell and oil and gas companies, maybe, because that would actually benefit Mother Earth. But when you go and try to kind of cut the legs out of Tesla, who is trying to do good for the world, then that's where you see kind of this selfishness coming out of capitalism, right? But I think that you can clearly see now that organizations that are trying to do the right thing and earn money with a purpose, or earning money while making the world better in the process, is becoming rewarded for that, right? And that's, in the end of the day, should be our goal as a society: live with capitalism, but turn it into something positive for the world.
Yeah, I think it was also Dan Schulman, the PayPal CEO, that also said there's no reason why you can't have profits and a purpose. They're not enemies of each other.
Exactly. That's exactly right. And it's just becoming so evident in general that is where the world is heading, at least to me, and this ESG focus that the investors are having right now is just again a clear indication of that we in general are becoming more opinionated as well. I think as we go along, like, I mean, I remember, you know, when I was like in my teenage years or whatever, I only cared about playing Nintendo 64 and, you know, meeting the occasional girl for a soft drink or whatever you did back then. I don't know. But these fika, there you go. Yes, you know my culture. But these days, the kids are really care, you know. I mean, like you know, look at the younger generation caring about environment. Greta, obviously Swedish as well, who is like really like representing an entire generation to wake up to kind of drive this change that the older generation needs to do, you know, and that shift has to come from the younger generation, and then that drives more accountability to the organizations. And you know, I think looking forward, I mean, these organizations that are taking genuine responsibility, not just who say they will, and you know, you see through it kind of thing. Those are the ones that will win in the future, I think. So I think that you are doing something really good.
Ultimately, it's for the benefit of the end user and the community, right? Which is very similar to, if you look at responsible gaming, you know, as being part of your you know, social, ethical, sustainability approach for a company, and which is one of the important things to note about what's happening. Again, to keep coming back to the market, which is now my home market, the US. It's you know, we're creating a framework for customers to play safe, to have an environment where they're taken care of. You know, onshore is where the players should be. You know, betting within regulated frameworks where there's play protections in place. I know there's going to be teething problems for the first couple of years, and some operators, unfortunately, might not do the right thing. You know, and they're going to. You see this with operators that are pushing away players because they're winning, just because they're winning, not because they're fraudulent or because they're looking for gaps in odds, or they're using arbitrage just because they're winning, and that's not great for the industry, because then everyone complains about it, goes back offshore. But to draw parallels to the cannabis industry, which is regulating, you know, state after state in the US, and it was, you know, maybe a precursor to gaming regulation previously. And unfortunately, I haven't smoked weed since I was in high school, so I'm not the biggest expert on what's available right now in the US. But you know, before there was no regulation around what it is, how it's grown, etc. Right, and then the government realized, actually, but firstly, we can both get tax revenue from it, and we can protect the consumer. You know, we can control the THC percentages. You know, we can control the origin, and then you can help the entire supply chain. You know, I presume that where the farmers get their seeds from, get their soil from. You know, it's all regulated, and the same philosophies and concepts apply to gaming. You know, the suppliers are regulated. The suppliers need licenses. They need to make sure they're doing the right thing. They're all under the same kind of laws and governances. So the end user, the players, you know, like what happened with Wirecard recently. You know, it's a lot harder for these things to happen when everyone is under a much stricter regulation. You know, players are protected, money is protected. Money to sit where it can be monitored and regulated. You know, make sure there's enough in the war chest so that players can be paid out. Make sure that the operators are being held responsible. Make sure that if a player's on a banned list or is a professional footballer who shouldn't be gambling, that's all on paper. It's all being documented. So at the end of the day, this whole wave of regulation, responsible gaming, player protection, and it's all part of the bigger picture of actually building a sustainable industry where everyone benefits. And then for me, the missing piece is the wealth distribution. You know, unfortunately or fortunately, our industry, because it's all online, environmental concerns is lower down the list. You know, you could say that we shouldn't be flying so much. Exactly. Our industry tends to fly way too much. I think in 2019, I probably flew on 120 flights, and I haven't left the country for over a year now. So maybe I could tick that box and say I'm environmentally conscious. But we Carousel Group, we use partners that are AAA, environmental standard compliance and pass a lot of ISO standards, etc. So that's great. But then what are the areas where we can actually pay attention to? And again, it comes back to making sure that your employees are taken care of, that your customers are taken care of. You're not trying to take advantage. You're paying your taxes, and everyone should win from this industry.
Yeah. And it seems, coming to regulation, again, looking at the iGaming industry and, the industry being banned in the US until recently, with PASPA being withdrawn, it seems to be kind of sometimes the collective hive mind of society is driving the opinion without it necessarily being tied to reality. And the reason I mentioned that is you mentioned the cannabis industry, which I think is a great comparison in this regard, where cannabis was illegal, since forever, not necessarily tied into the reality of the side effects of cannabis, obviously, but the collective hive mind decided that this is, have been indoctrinated for a long time and have decided that this is not something we want our kids to be confronted with, and maybe they don't want to take the dialogue with their kids or whatever. So they choose to not wanting to regulate it. But again, through this kind of through collective discussion, through social media, through platforms like Clubhouse and so forth, these arguments can be kind of trashed out in a way where the hive mind shifts very quickly now, right? These big discussions are there outside of the mainstream media, and therefore, you see this like very big shift, a very quick shift with legislation in state after state in cannabis use, and similarly in the iGaming industry. That's where potentially it's really important for the industry then to genuinely solve the problem, the question of problematic gambling, for that very reason, so that the kind of the hive mind, the general consensus of what is the iGaming industry actually is seen from a better light, so that we are more favorably treated by regulators.
Yeah, there's another podcast which I listened to it recently, and actually I believe it was in the HBR magazine a couple of months ago. Was an article from Bob Langer, the ex-head of sustainability at McDonald's, and he has this concept. He did amazing things, like he invented the brown paper box instead of the plastic one, and saved who knows how many billions of tons of trash from McDonald's, and introduced things like animal welfare for their meat. And he has this concept where it is making friends with your enemies, basically. And I think that's really interesting in this case. And I've talked about it as well with our executive team at Carousel Group, about how we need to embrace as an industry our enemies and have a shared dialogue. Particularly when it comes to things like responsible gaming, addiction, etc. Because typically speaking, we're very polar opposites, right? There's a lot of like vitriol and hate maybe between the people who are on the other side of the fence saying gambling's addictive, it's horrible, and then unfortunately the 99% on the other side are saying it's fun, it's entertainment, we love sports, we love gambling, we watch sports all day long, sports isn't sport unless you're gambling. And the two rarely meet in the middle and sit down and actually go open up a dialogue and say, how can we work together? And some more modern businesses, I'm sure, do it very well, and I don't want to criticize those businesses, but for the most part, we implement responsible gaming as the regulation sees fit, and we never really try and open up a dialogue and say, how do we find a happy ground? Going back to this, this Bob Langer's approach was to find a shared common goal. I find this concept really interesting. Instead of saying we think you're wrong and they think we're wrong. For instance, in his instance, when he was trying to understand animal welfare, and it wasn't done before. But I think maybe in the 70s, 60s, 80s, I don't remember. But instead of, typically he would go and talk to animal rights activists, and they'd be like, you sell meat, you're the devil. And he'd be like, well, we make most of our money off meat, we're never getting rid of it, so sorry, that's the end of the conversation. But instead, to change the dialogue to, we both want to make sure that our customers are happy and we take care of animals. How do we do that together? And you sit and you have a shared dialogue and you find a common goal, which is animal welfare. And the gaming industry is founded in the terms of, player welfare. both parties want players to be taken care of. So I think it's really important that both the industry and also the people on the outside, or the naysayers or the haters of industry, also we find a common space where we can talk together and discuss how do we create a safe space for our players without getting rid of the experience. Because even the people who had addictions, at one point they were on the other side of the fence. They wanted to enjoy gaming. Unfortunately, they weren't given the tools or the controls or the education, and they ended up going down the wrong path. And it's terrible, and we shouldn't allow that to happen. But what are the right tricks? And surely it's not just as simple as adding in a box where they can self-exclude. Surely there's more to it, and that's kind of the secret sauce that we all need to collectively get together as an industry.
Exactly, and again, drawing parallels to the industry, society says that gambling is bad and therefore it should not be allowed. It's like the Swedish way of handling the problem back in the day, right? And what happens instead? Yeah, you'll have all these offshore operators who operate outside of Sweden, and the players who will gamble will still gamble, right? So what you're saying here is that instead of just closing your eyes for the problem, let's have a dialogue about it and see where is the middle ground, and similarly now when we are going through in Sweden again over-regulation potentially, and the channelization rates are dropping drastically, surely you would think that there should be scope for scope for dialogue to see, okay, how can we keep the channelization rates high? And by doing so, we need to understand that we can't just overregulate because that will drive the most vulnerable players that the whole reason why we are doing this legislation for in the first place to the size where they are not supposed to be, right? And that's where the discrepancy is perhaps in certain countries today, and do you get the feeling that in the US, do you get the feeling that dialogue is more, let's say, more fruitful with the regulators? Are they listening more, so to say, or will it be more political theater that you could argue is what's happening in Sweden, for example?
I think that they're not ready to understand it enough. I think that it will come in time, and this is one of the things that worries me, that we'll wait for an event to happen, like what's been happening in the UK recently, for instance. Wait for things to blow up and hit mainstream media and become a problem, and then it's bad. Then it's bad for everyone. I see particular issues and concerns. For the most part in the US, the age for gambling is 21. However, fantasy sports doesn't have follow the same age bracket. So you've got 18, 19, 20, 21-year-olds playing fantasy sports, exposed to the same brands that are going to be their sports betting partners potentially. And this is why some of these brands are making so much money now. Fantasy is not the most profitable business to be in. But they get 3 years of getting the brand love and the brand recognition. And then, these teenagers roll straight into gaming. How does a regulator deal with that? It's not illegal per se. It's not treated as gambling. And then on top of that, you add the exposure to advertising now. NBA, NFL, NHL, MLB, every major sport now is being sponsored by big gambling operators. UK's seen this, right? Spain is banning, or has banned, advertisers on shirts for La Liga.
Yeah.
I think UK's, I'm not sure whether it's happening at the moment, but I'm sure there's been discussions about whether it should be appropriate or not. The US is just getting started down that path, right? Teams are only starting to now do sponsorship deals. There was the first case late last year of a college team doing a deal in Colorado with an operator or a college organization. And there's some great ways to do it where you actually focus on responsible gaming, but at the same time, it's a real gray area. And if as a regulator, that's actually outside their scope almost, right? Because it's a different brand advertising, but the same brand is actually a gaming brand.
Exactly.
How is this going to get dealt with in the future? I don't know, but it's definitely not an easy topic. And from what I understand, that younger demographic is now in the US the most at risk demographic for harm, for responsible gaming issues.
Yeah, and that's a discussion in its own right. I think. I mean, to draw some parallels to the alcohol industry in Sweden, it's illegal to advertise alcohol drinks, basically. And so similarly, the way they get around it is to launch a product. So they launch a beer that is alcohol free, and then they would market that product. So it would be the Carlsberg Zero or whatever they would call it on. But obviously they are building brand equity through marketing the same product. You have a connotation to this beer can that looks exactly the same as the alcohol. I guess it's impossible to get it right. It's
At
just
the same time, the solution is initially self-regulation and doing the right thing. And
yes.
And it comes back to the same concept we're talking about with the European trend now of investing in sustainable businesses and funds that focus on sustainable businesses, is the companies that do it right. And we are one of those companies. We take care of our players. We focus immensely on harm minimization. It's an open dialogue. It's not a dirty topic to talk about in the business. And we will continue to keep exploring this. And it needs to be a conversation. It can't be something that you shouldn't discuss in the gaming business. It can't be something that you shouldn't discuss openly. You need to accept the reality and work constantly and decide as a business that it's going to be an important part of how you run your business, your ethics, your code of conduct. And it comes across for us at every part of our business. We discuss it, whether it's onboarding customers, the wording that we use, even, on social. We've had some dialogues recently where we've been retweeted by brands that are lifestyle brands that, for instance, like candy brands. And is that actually acceptable? Is that unethical? Because there's something that children might like. But instead of ignoring it and just saying that's bad or that's right, we're going into dialogue. And I think this is the right approach, is that operators need to keep discussing it and decide what's right or what's wrong. But actively make an effort to minimize the harm, minimize the exposure to people that shouldn't be exposed to it. And I think if all operators adopt that same mentality where, you're always just trying to do the right thing, you'll eventually find it. It's no different to any other industry, right? There's safety elements in every industry that that are really important, not just alcohol and gaming, but everything from, safety of cars and making sure you're taking care of your customers, and false advertising in all kinds of industries. Anything, making sure that your customers know what's in the food that you're giving them. It's all part of the same process. You can either be ethical about it, or you can be unethical and look for ways to get around it.
Yeah, it's a good point. Daniel, this has been a fantastic podcast today, actually, and we spoke about before the podcast that let's make this into like a Joe Rogan Experience type 3-hour thing, and easily we could have done that, but unfortunately I have to run and get a haircut. and as you can see here, my hair is a little bit.
It's been a while for me too.
Yeah, I know. But you know what? If you were up for it, I would love to do a part 2 ASAP. And because we have a lot more points actually to discuss than we only went through not even half of the things that we had talked about before the podcast today. Shall we do that, do you think?
Let's do it. Next time I'll be Elon Musk and you can be Joe Rogan, and we'll do it properly.
Oh yeah, whatever that implies. Okay, but yeah, let's do this soon. Actually, I would love to, if you have time, even in like the next couple of days or something. Let's follow it up while we are on a streak here.
Let's do it.
How about that? Awesome. All right, Daniel. Thank you so much for today, buddy.
Awesome.
Yeah, absolutely pleasure. Let's see you soon, man. And thanks everyone for tuning in as well. Thanks to our sponsors, and I wish you all a great day. See you soon, everyone. Ciao.
Ciao.